Hey everyone, John Henry here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 14th of the month. Plenty of market movement today, that's for sure. We started off the day with a pretty rocky start, all over the place, up, down, left, right, and center. We had all kinds of movement, especially with Rex Tillerson getting basically fired, and the 8:30 news pretty much right before that, just all over the place. So lots of price action to work with today. Now, before we jump into all the charts, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to sign up for our newsletter email list. You'll be notified every time one of these videos comes out. Along with that, in the newsletter, we talk about a bunch of things that we just don't have time to talk about in the video, whether it's options, crypto, stocks, you name it. If it's moving, it's going to be in that newsletter, so make sure to sign up for that so you don't miss any of that important information. Of course, along with that, also, if you haven't done so already, click on the live Trader subscription and trial info, and then from there you can sign up for a free 3-day trial. It's a really good way to kind of hang out with us for a couple days in the room and see what it's all about. It's a good way to jump on in for a few days and ask some questions and see how we trade and all kinds of fun stuff. So make sure to sign up for that if you haven't done so already, so you can jump on board. Now, taking a look at the charts, obviously quite a bit of movement today, and there's going to be a lot of movement back and forth. It's not just, a unidirectional move up or down. There's a lot of movement all over the place. We've got big candles going up and down, and again, with all of that news and stuff, it gave us quite a bit to work with. Now, the interesting thing here is that the euro was initially kind of looking like that big breakdown move into, is this going to be a pennant, or, what's going on here? Ended up breaking out higher. So we broke out higher, tested that resistance area, popped above it, and then used it as support, only to get stopped dead in its tracks right back at that earlier wedge again. So we're stuck in the exact same place that it's been in for quite a while. It's having a little bit of a hard time here getting anything going, and with that lack of, not necessarily conviction, but with the lack of breakout movement to the upside above this resistance, we have to keep paying attention to it. And even though it's been used over and over and over and over again, well, it's still working, right? So if it's not broke, don't fix it. And that is those wedges from earlier. They continue to constantly be used. So we are coming off of the bottom edge of that wedge. Bottom edge of the wedge, and pulling back a little bit. So a little bit of profit taking going on, not a big surprise there. A lot of times when you get those types of situations where, we have a big level of support or resistance, especially one that's been going on for quite a while, you're going to have a situation that all of the traders are following the exact same place, and well, they're going to keep placing their orders around that area, and it creates kind of this self-perpetuating event where, even though it's not that big of a deal, that line, it could just be an arbitrary line in the middle of nowhere, but because so many people keep watching it, it creates an area of interest, and that's kind of what we're seeing right now on the euro. Now, the overall bear channel from earlier, that's not really going to help us a whole lot, so we can get rid of that. And it does kind of look like, maybe we're widening this out to maybe a new little wedge low. We could be looking for a wedge low off of these most recent lows and that big dip that we had. And we can see that the market is responding well to that rising support. They missed it a little bit there. But all the same, we can see a nice lift to the upside. So even though we do have these earlier wedges that are kind of holding the market down, we also want to keep our eyes on other potential levels of support or resistance that might be coming into play. And we're located right around an area of interest. We have that falling level of resistance coming in, along with that earlier wedge top, and that's creating a zone of pretty heavy resistance that we might not want to deal with. So with a big bull breakaway to the upside, but not enough consistency to really show us the buyers want to take it, we might be gearing up to continue this range. It might just be widening this range out a little bit. We are nearing an area of resistance, and going into the overnight session with such a strong rally to the upside, likely buyers are going to buy into a pullback if they get one, but I'm not anticipating much of a major high above the most recent one that was put in at 24,130, at least not tonight anymore. Now, going into tomorrow, they might be able to break out a little bit further up to try to grab that 24,430, 440 area. But for right now, looking for the overnight session to go a little bit sideways, range bound, slight pullback, and I'm definitely leaning on the buy side on that pullback to see if we can get up into that kind of crux area where they all come together. Over on gold, had another bounce off 1318.3 and just beautiful support off of that area. That has been absolutely no joke at all. Monstrous support off of these lows, and every single time it comes down there, the market rejects it heavily. And this time, we actually have something that is quite indicative of a potential reversal. Now, I don't really consider it my job to try to find reversals. I would rather go with the trend. But little clues like this give us something to look for, and that is when you have a big poke to the downside, comes down and forms another higher low, buyers will start buying into that higher low, assuming that it's going to be a trend reversal, and they put their stops right underneath that higher low. The correct placement for a stop should be below that low, or even a little bit offset so you don't get trapped. But a lot of traders will put their stop below that low, and that is a hot spot for a lot of big buyers. Think Goldman Sachs, right? The traders who are kind of using those stops to their advantage a little bit to maybe fill some bigger orders. Yeah, they're going to be hanging around those areas. So if you do end up getting a dip back down there, it traps that low, but does not break down to a new low and begins reversing. That is a potential sign of reversal in the markets that we're seeing right now. And although we are kind of resting on a resistance here at 27.5, that level has been kind of a nightmare for the past month or two now. If we can start seeing some signs of breaking above that, we might be full bore ready to fly up higher here. And that does come back towards around, 1342, the earlier level of support or resistance at 45, but noting that these kind of double top highs in here have been pretty strong. Might want to front run that a little bit. So we are getting some potential clues that the buyers are trying to come in pretty aggressively, and if they do hold this and start breaking above 27.5, it might be off to the races higher. Now, in the overnight session, we are still holding resistance. So I'm going to have a hard time going on the buy side. Going on the buy side knowing that we're trading directly into resistance, kind of breaks a couple of my rules. Not a big fan of that one. But if we can get a little bit of a pullback, maybe back towards even a halfway point, back to around 22 or 23, might be a nice area to start buying into for a secondary push to the upside to reattempt 27.5, and then maybe from there be able to break out above it. Over on crude oil, grinding back towards that level of support at 60.13. It hasn't hit it yet, and we are coming off of a very big bear push to the downside. Monster bear bar. And today, that's how the day went today across the board. I mean, you pick a market, this is what we saw today. The FDAX, the FESX, the crude oil, gold, bonds, it doesn't matter. It had a sharp move in one direction and then a sharp correction all the way back down again. And, well, this is the one for crude oil. So with that heavy correction to the downside, that's showing us that, well, I mean, in context, every time that we've had a big bear bar, one of two scenarios happened. Either there was really heavy follow-through, and most of that follow-through happened relatively quickly, immediately right after, and it barely pulled back into it. Or the market faded that move, and the market went into a little bit of a range. We see that over and over and over again. Now, the reason I say it faded it in the sense of it didn't pull back much on itself before continuing, that's important because this one has already pulled back farther than pretty much all of the other examples of that, and that's giving us a clue that we're probably going to go range bound to slightly up. Now, another type of support coming into play, of course, the rising wedge support, rounding off the that kind of sentiment to the upside. And then one other thing that stands out here is this big rally to the upside, this monstrous rally higher. Very frequently when you have that aggressive of a bull run, or a bear run, doesn't really matter, the market responds very aggressively to when it comes back down to the lows of where that run started. So in this case, we have that horizontal support at 60.13, but we do also have the potential of finding support just a little bit above that at around 60.20, and that's going to be the low of that big bull rally to the upside. Now, they'll probably stack up together. I mean, if they're going to hit 20, it's probably going to hit 13, but we're adding more and more bias to the upside as we get more information. So it's showing that the buyers are kind of trying to build a base down here, and if we can get a dip down into 20 to 13, and maybe even down to 72, depending on how big of a dip down that is, we might be looking for a lot of buyers to build in to shove the market back up. Now, we never made it up towards that area of resistance up here, 62.85. This would have been a really nice bull run to the upside if that actually happened, but ended up going down, so there's not much we can do about that. So we're still kind of waiting to see what happens there. But right now, going into the overnight session, I have to assume that now, given the information that we have, we're probably going to go a little bit sideways to up, with the caveat of the fact that in about 15, more like 17, 18 minutes from now, at the time of recording this, we do have the API report coming out as well, and that can definitely throw the market around. So with the API around the corner, that will give us a little bit of a clue on what to expect for tomorrow's inventories, but, that said, the analysis that we're doing right now could get a little bit choppy. You might have to kind of think of the analysis on Tuesdays as fuzzy as we go into Wednesdays for crude oil. Now, on the S&P, we did hit that high. They got the objective of going back up to those high closes at 28.01. They filled those high closes and even made it to a quick little new high before crashing all the way back down again. Heavy amounts of selling volume coming into play here, and it looks like we're putting in a potential new top for a wedge coming across, especially the fact that if we line all those up, it worked out literally perfectly. You cannot get a better hold on a wedge top than what we're seeing right here. So we have the wedge top coming down, and we also have a 3-push wedge top coming up, both of which are kind of crossing together and adding a lot of support and, or in this case, resistance to the downside that the sellers are heavily taking advantage of. This type of bar, excuse me, that's likely to find a decent amount of continuation. I mean, it's hard to not see this sort of bear bar that doesn't at least get a little bit of follow through. Now, when I say this kind of bear bar, what I'm referring to is when you have a market that's continuing higher or lower, doesn't really matter. But let's just say, as an example, we have some nice bull bars going up like that. It pauses for a little while, maybe gives you a doji, whatever the case may be. But then you see a candle that's, let me add some wicks on here so it looks a little more realistic. Natural Picasso over here. Then you get a candle that looks like this, right? It opens up and then closes down below the previous bar's low. That's the important part. It closes below that previous bar's low. And if it can close below more than one, that adds even more emphasis to the downside. That is a heavy type of reversal candle. Now, candlestick patterns by themselves, not a good enough reason to take a trade. But if we have it in context with something else, like, I don't know, 2 wedge tops holding along with a high close test and holding, we have 3 different levels of resistance pushing back on the market, and we have that kind of candle. And if we look at this bear bar right here, this big boy right here, right, that closed below 1, 2, 3, 4, 5, 6, 7, 8, 9, well, we won't count those. We'll count all of those and then below that, right? So 1, 2, 3, 4, 5, 6, 7 bars. So it closed below 7 low bars before it finally found a close, and it closed really low in its range. That is a heavy, heavy selling bar. Those types of candlesticks are the kind that can spark a little bit of fear, and well, we know what fear does in the markets. Cough, cough, zoom out a little bit. So with that kind of movement, am I anticipating a crash all the way back down to 2,500? No, of course not. But that is potentially a start of a heavier pullback than what we've seen so far. The last time we saw a big bear bar like that was right here. Same instance. It closed below a good 4 or 5 candles, and it had really good follow through to the downside. But there are times where it doesn't work, right? You had a really strong bear bar here, had 1 candle, which is still 4 hours of follow through, before it reversed all the way back up. We had another one right here that had no follow through at all until a little bit later after it already trapped the highs. So that doesn't always work, and that's why I always say candlesticks by themselves, not good enough. We need to stack them up with something else, and here we have 3 different things telling us that the sellers are potentially coming in, or at the very least, buyers are letting off the gas pedal while they take profit. So looking at this, I'm definitely going to be bearish going into the overnight session because it makes more sense. Now overall, in the long run, probably still looking for buy side if we can get a nice dip to buy into for new all-time highs in the next couple months. But for right now, this looks like a pretty good potential sell in the overnight session to drive the market lower. Now, going into tomorrow's news, at 4 o'clock tomorrow morning, we have ECB President Draghi speaking out of the Eurozone. At 8:30, for the U.S. session, we have core retail sales for February. Those are forecasted at 0.3%. At 8:30 as well, we have the PPI for February forecasted at 0.1%, and the retail sales at 8:30 forecasted at 0.3%. Now, the crude oil inventories are tomorrow, and they're forecasted right now at 2.023 million. That is a build of 2.023. Now, when we're looking at the inventories, I always want to kind of keep track of, okay, well, the inventories are good, but we also have the APIs. Does the API give us anything to really kind of look for? Well, we won't know for another, 15 minutes or so, but the previous was 5.66 million, and the last couple times the API is lined up really well with the inventory forecast the next day. So right now, if all of that kind of comes into alignment, we're looking for a bearish number on crude oil, but we'll have to wait and see in the next, 12, 13 minutes. So that's going to do it for the outlook for tomorrow's trading. As always, like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we will see you all then.